Hey guys, Trey Willard, realtor with Keller Williams, Greater Baton Rouge, hanging out with my good friend and preferred mortgage lender, Aaron Taravella with GMFS. Aaron, you want to tell them a little bit about yourself?
Yeah, absolutely. How are you? Aaron Taravella with GMFS Mortgage in Baton Rouge. Been in the industry for about 15 years now, and we've seen some wild rides here recently in the industry, and we're here to try to make all your mortgage goals come true. And here with Trey Willard, one of my good buddies as well, and here to answer some questions today.
Yeah, guys, so we'd love to bring some value to you guys today. We've gotten several questions from our clients and really wanted to just try to and forecast as much as we can of what the economists are saying, what the mortgage lenders are saying about the market in 2021. So Aaron, mortgage rates are obviously historically low right now. Where about are the rates today? And today meaning January 13th, 2021.
Right. So, as probably everyone knows who is in the market to buy a house, refinance, rates have been historically low here for the last going on almost a year now. And rates are probably in the upper 2% on a fixed rate 30-year term mortgage. 15 years, they can get a little bit lower down into the lower 2%. So it's a wonderful time to buy, refinance, if you're out there, in the market.
Perfect. And we get the question a lot, what determines how someone or what rate inevitably somebody would qualify for? So you say 2.7, 2.8, but what is the consumer, how do they qualify for that low of a rate?
Absolutely. So, rates are determined by credit scores, types of programs, terms, how much you're putting down. So there's a lot of things that as a mortgage lender we have to look at.
Sure.
So one of the things that kind of gets thrown out there is, is everyone qualifying for those low rates? And I would say yes, if your credit's excellent and the type of programs that you're looking for, absolutely. But of course, not everyone qualifies for those rates.
Sure, and I know there's a lot of options as far as when it comes down to purchasing a home. There's different types of programs, different down payment systems, things like that. You want to just kind of rip through a few of those really quick?
Yeah, absolutely. So, the major programs out there are conventional mortgages. You have some government programs like your FHA, VA, rural development. Those are the types of programs that are out there, and as a loan officer and mortgage lender, we're going to make sure that when we have those applications that we're qualifying that person for the best option that fits your needs. And we talk through it, make sure that everyone's comfortable at that point with those programs, and that's how we usually determine which option's the best.
Perfect. So just pretty thorough conversations with your clients to determine, hey, maybe rural development is really good for you, maybe FHA is a better option, maybe conventional is a better option.
That's right. Yep,
okay.
Absolutely.
Perfect. And one of the biggest questions we get is closing costs, right? Our clients are always asking us about, how do we determine closing costs? So obviously there's seller paid closing costs, which are traditionally, commissions and some title work and some cancellation fees and things like that. But there's also closing costs in addition to obviously the down payment. So you want to give them a quick rundown of what they can expect in closing costs?
Yeah, closing costs, I can only speak for myself and, my company.
Sure.
On what we usually charge as a lender cost, which is on average between about $1,300 and $1,400 out there for lender cost. Now again, that could be different throughout all other companies. Now, some of the things though that you really have to focus on too is just because the lender cost is that cheap doesn't mean there's not other costs involved.
Sure. You
have appraisals, you have title work cost, and the other two major things that you have to collect for typically as well as your escrow, which is taxes and insurance. So, when we're setting up a loan, we have to determine all of those factors into one. Then, like Trey said, if we can get some seller paid closing costs out there, that would help for that, and maybe pay it all. And you only have to worry about your down payment if you're doing a loan that requires one. And if maybe the sellers are not willing to pay for all of it, then the buyer would be responsible for the difference. That's all.
Okay, cool. So obviously the taxes and the insurance are the prepaids, right, and the escrows that you guys collect, and there's a couple other fees associated with it. Is there like a certain percentage or something that a client can say, hey, if my purchase price is X, I can maybe do some quick math to try to figure that out, or is that pretty difficult to do?
Pretty difficult to do, I would say. I think speaking to their lender,
sure,
it's going to be your best option just to get that number, and
down,
it might not always be to the penny on especially getting something up front, because what we do not know exactly is taxes and insurance on that particular property at all the time. So
sure.
So we try to do our best job of getting as close as we possibly can until we start moving forward.
Perfect. And probably like the last thing I think that a lot of people are wondering is, rates have been pretty low now for several years, and I've put my foot in my mouth a few times to say we probably won't see super low interest rates like this again, and then I always seem
sure enough
to be wrong
yes.
on that front. But where do you see mortgage rates going in 2021? And even, I know we can't forecast it, we obviously don't have a crystal ball.
Correct.
But where do you see things going in the next 12 months?
Everything that I read in the industry, we're gonna probably be like this for the next couple of years.
Okay.
And that's hoping that's the case. I think
Sure.
that's going to be a huge benefit for a lot of people that's in the market to buy or refinance, to take advantage of these opportunities right now. Because have we seen rates low like this in the past? We have, but in my time frame that I've been in doing it, maybe
Sure.
once.
Right.
In 15 years that I've seen them this low. So it is some, I guess one of those things that definitely take advantage of it if you can.
Sure.
If you're looking to, splurge a little bit more in your purchase price, your family's growing, you're looking for that 4-bedroom instead of the 3-bedroom out there, you might be able to actually get a mortgage payment for close to what you're paying now and increase in your buying power for the new house. So.
Yeah, which is pretty awesome. So money's cheap, right? Goes a little bit further. Obviously, on our end, on the real estate side, we're experiencing insanely low inventory levels. Our absorption rate is probably in the month of December, it was around 2.4 to 2.6. We continue to see that decline. More houses are going under contract and going off the market than homes are coming on the market. So I think that's a trend we'll continue to see until the springtime. I think in the spring and the summer, sellers will start to put their house on the market, and then also the COVID and is still a real big issue in the country right now, and definitely in our area. So I know a lot of people are remaining extremely safe with that. So I mean, again, on the mortgage side, obviously predictions are that rates will continue to remain pretty low, and on our end, on the real estate side, I think we'll continue to see some of the market and absorption rates get absorbed, but in the spring and summer, I think we'll see more houses coming on the market. So, Aaron, thank you so much for your time, man. I appreciate it. Thanks. And if you guys have any questions about obviously buying, selling, investing in real estate, again, let us know how we can help you guys out. And then, of course, if you guys have any questions about the mortgage process, please reach out to Aaron Taravella and his team at GMFS.
Thank you.
Thanks.